I've been paying too much tax every year. I need a smarter way to reduce my tax liability without doing anything wrong.
Mr. Rama, I think you can consider creating a settlement. You transfer your building into a trust and rental income can be given to your children.
So legally, the property won't be mine anymore?
Yes, the trust will own it and I will manage it as trustee.
Alright, Miss Salma. I think I will follow your suggestion.
Under the Malaysian Income Tax Act 1967, a settlement exists when there are three conditions are met. First, there must be an arrangement. An arrangement can be anything, includes a transfer of assets, a covenant, or even an informal agreement. It does not have to be written. It can be also be oral. So second, the arrangement must be involve property, income, or both. Third, there must be a settler. Settler is the person who provides or transfers the property or income. In other words, the settler is the one who sets aside assets or income under the arrangement. Next, the income paid to or used for the benefit of someone else. This could be a spouse, unmarried children under 21, or any other relative or any other persons, depending on the section of the law applied. So in simple terms, a settlement exists when a person transfers property or income to a trustee so that others can get benefit from it. Finally, settlements are closely monitored by the law because they can sometimes be used as a way to reduce or to avoid tax.
Mr. Rama, once you sign the trustee, you are creating a settlement. You are transferring this building without any payment, which means without adequate consideration. Rental income will arise from this property.
What about the rental income?
Buildings earn 2000k rental income annually. Once transferred, this becomes income from settled property.
But this is a trust. Doesn't that change the tax position?
No, even if a settlement creates a trust, Section 65 still applies. Creating a trust does not remove tax liability.
Can I cancel this trust later if I change my mind?
Yes, according to the trust deed, you may revoke the settlement and reclaim the property. Income from revocable statement is deemed to be your income as long as you alive.
So, this is a revocable settlement?
Correct. Under Section 65(2), because this is a recoverable settlement, any income from the property is deemed to be your income.
Even before distributing the money?
Yes. Also under Section 65(5), the fact that a trust is created does not prevent Section 65 from applying. Legal form does not override tax liability.
According to this situation, there's three elements satisfy Section 65(2). A settlement exists. The second one, property is transferred without adequate consideration. And the last one, income arises from settled property. A revocable settlement is where the settler has the power to cancel the settlement. The second one, get the property back. And the third one, control how the income is used. So, even though the property is legally in a trust, the settler has a right to revoke. Any income from the settled property is deemed to be the income of the settler, regardless of who actually received the income. So we go to the Section 65(5). According to the Section 65(5), when a settlement creates a trust, the trustee is treated as a settled person. Any income arising under the trust is subject to Section 65 settlement rules. As if the trust were the settlement itself, Creating a trust does not remove the application of Section 65. Income may be still taxed on the settler or deemed to be the income of another person under Section 65(1).
However, here is 50k from trust income for this month.
Thank you. That really helps me with my studies.
Good, but I hope the tax on this is less than if I receive myself.
Actually, Mr. Rahman, because Farah is unmarried and under 21 years old, under Section 65(1) says that income is paid as if belong to you. So, the income is taxable to you.
Wait, even though it's going directly to her?
Yes, this prevents parents from shifting income to minors to reduce tax.
Aiman, your portion is 60k for this month.
Thank you. I will declare it on my own tax return.
So this income is really yours.
Yes, Aiman is over 21 years old. Section 65(1) does not apply. So, income is taxed in his hand and not yours.
At least some of the trust works as intended.
Section 65 sub 1 settlement for a minor under 20 years old. Income arising under the settlement is for the benefit of a minor or any relative of the settler. It shall be regarded as income of the settler. This provision applies when the following conditions are met. First, it is during the life of the settler. Second, the income from the transferred asset will or may become payable. Third, the income is to or for the benefit of any minor or relative of the settler. And last, the minor or relative is unmarried and under the age of 20 years on the first year of the assessment. Section 65 sub 1 may not be applied in the following circumstance. First, a relative under 21 years old who is married. Second, a relative who is 21 years old or more. The issues or marriage status is not important. Third, the beneficiary does not fall within the definition of relative.
Mr. Rama, 40k from the trust has been used to pay your car loan this month.
That's helped me a lot.
Wait, does that mean it's like he received the money himself?
Exactly. Section 65(3) treats any direct or indirect enjoyment of the income by the settler as his income for tax purposes. Using trust fund to pay for your personal expenses count as enjoyment, which means even though the money went directly to pay for your loan, it is considered that you used the income. So, for tax purposes, it is treated as yours.
So indirect benefits are still considered as mine?
Yes, this is how law prevents people from avoiding tax while enjoying the benefits.
Income arising from a settlement made use by a settler who controls the settlement. The first point is where in a basis year for a year of assessment, the settler, relative or company controlled by the settler or relative make use for his or its own purpose. Next, whether by borrowing or otherwise. And the last, any income arising or of any accumulated income from a settlement to which he is not entitled the amount of income or of any accumulated income so made use of would be deemed to be the settler's income and not income of the beneficiary for the relevant year of the assessment. The next point is if the beneficiary who is actually entitled to the income arising from the settlement has paid tax on the income, repayment will be made to him. This situation will arise when the income is deemed to be the income of the settler.
I've already paid tax on some income my children or the trust use. Can I get back?
Yes, under Section 65(4), you may recover tax paid from the trustee or beneficiaries if they eventually receive the income.
So, if I get money from the trust, part of it may go back to my father to cover the tax he paid?
Yeah, exactly. The way the tax burden is fairly allocated.
Well, at least that's some relief.
We will arrange reimbursement.
Where tax is charged on or paid by a settler on income deemed to be his under a settlement, the settler is entitled to recover the tax so paid from. Any trustees of the settlement in receipt of income arising whether directly or indirectly, or the beneficiaries who actually receive the income deemed to be the settlers. And the settler is also entitled to require the Director General of Inland Revenue (DGIR) to furnish a certificate specifying the amount of tax so paid, and any certificate so furnished is conclusive evidence. This certificate is to assist the settler in his tax recovery. Section 65 ensures that settlements are not used to avoid tax, whether income is paid to underage children, enjoyed by the settler, or held in a trust, are all carefully regulated. Application of anti-avoidance. There are three circumstances where the income is deemed to be income of the settler. First, under Section 65 Sub 1 is unmarried relative below 21 years old. Second, under Section 65 Sub 2 is revocation at any time. And last, under Section 65 Sub 3 is settler make use of the income of settled property. Tax avoidance only applies during the lifetime
Some
of the
delay.
settler.
Before completing this assignment, I had a limited understanding on how settlement provision under Section 65 of the Income Tax Act 1967 operates in a real-life tax situation. Initially, I assumed that transferring assets into a trust would automatically shift the tax burden to the beneficiaries. While doing research for this topic, I struggled to differentiate between legal ownership and tax responsibility, especially when dealing with provision such as revocable settlement and indirect enjoyable income.
However, for me, through the group discussion based on 18 scenario for the reading of legislation, I developed understanding of how anti-avoidance rules function in practice. One of I really understand is Section 65. I learned that if income if given to unmarried child under 21, it is still treated as a settler income. At first, I feel unfair, but later I understood that this rule exists to stop parents from using their children's name to reduce the tax.
In a real tax practice, this is very relevant. Clients often assume that transferring asset into a trust automatically reduce tax. However, provisions such as Section 65(2) on revocable or recoverable settlement show that if the settler retains control or can reclaim the property, the income remains taxable on them. This reflects the government's strong stance against tax avoidance.
For my self-reflection, what challenged me the most was Section 65(3), because I used to think that income is only taxed when you receive the cash. But learning that indirect expenses, such as using trust to pay for your personal expenses, which is from the example that is loan, are still taxable, really changed my mind. It made me realize how detailed and strict tax law can be. That's all for me.
So preparing at this script, I struggled to connect each section to real situation. However, the struggle actually helped me to learn better. I become more confident in explaining tax concept using example instead of just memorizing section. I also realized that I learn best when I apply the law, not when I simply read it.
These topics is important for my future career since I need to provide client with responsible advice as an accountant or tax professional. Understanding settlements help me avoid giving misleading advice and ensure compliance with tax law. Going forward, I plan to improve by practicing more case studies and staying updated with current tax policies and budget.
Conclusion. This assignment helped me understand that taxation is not just about knowing the law, but about understanding its purpose and application. I learned about the Section 65 settlements and how tax laws are made to ensure fairness and prevent abuse, especially in family arrangements. Through this project, I become more confident in applying tax principles to real situations rather than simply memorizing section. Most importantly, it increased my awareness of responsibility that will accompany my future work as a tax professional. This experience has enhanced my professional judgment, strengthened my critical thinking, and motivated me to keep learning more about taxation.